Hi, everyone, and welcome to the new year, 2022. And it certainly has been a tumultuous week so far. By the way, my name is Michelle Schneider, in case you don't know that by now. And this is Mish's Market Minute by StockCharts TV. But anyway, getting back to our tumultuous week, a lot of it has to do with the Federal Reserve. So as we're heading into 2022, we have a classic sea change in that from 2008 on, we've had very accommodative Federal Reserve policy with lots of bond buying and very low interest rates. In fact, basically 0% interest rates. So now that the Fed has been firm in their commitment to end the taper by March 2022 and actually look at the possibility of 2 to 3 interest rate rises, what does that mean for the market? This is a year now where you really have to think before you make investments what stocks can sustain higher interest rates. So that's going to be the theme for today.
So I'm calling this segment No More Easy Money, Now What? And I thought we would start with the idea of the sea change by, first of all, really understanding the macro, because that's going to be the key this year, is how is my modern economic family responding thus far? Not only what we're seeing here in January, but how we came into January. Some things are actually continuing, and I think we can see the writing on the wall. Plus, what are the outliers saying? We're going to take a look at some of the commodities, interest rates, the US dollar, and of course, volatility. And then with the remaining time, I've just selected a few of the choice picks, more sector ETFs than actual stocks, although there's a couple of stocks there to keep your eyes on. And remembering, of course, that we have a long year ahead of us with calendar ranges coming up and earnings season. So let's begin. Here is the list of the symbols that we will cover. I want you to know that if you go to my website, marketgauge.com, and look at the home page, there is a way to download my 2022 trends, themes, and trades to watch, where I get into 20 different stock picks and things to watch out for this year too. It's all free with charts and great explanation. Okay, so let's start, of course, with where we always start, which is IWM, or the granddaddy of the modern family. And so I know that we touched off last year, we could actually say that now, with the phenomenal range that we've seen since really February of 2021, where this has gone sideways, and every time it reaches close to support, it pops, and every time it goes through resistance, it sells off. And really, except for this little blip that we saw here in November, the range has really been between, say, 207 and 234. Now, what's interesting is as we started this week, we almost got through that 50-day moving average. And this was the big decline that we saw on Fed Day or Wednesday, with now some support and some buying coming in. But clearly, all this is doing is putting us in the middle of the range, really very indecisive. So one of the key areas to watch for this year is going to be the way that this range resolves, which I'm assuming at some point will happen. With the higher rates, of course, the Fed is talking about an improving economy. And of course, we could see that. That would be actually really awesome if they're right about that. And they have to be careful about not raising the rates too fast to not squash any kind of improvement in the economy. But the industrial manufacturing sectors, which we represent here heavily in the Russell 2000, are telling you that they absolutely have no idea which way it could go. So very simply, until we see either a break over 234 or a breakdown under 207, it's very hard to know. And of course, you can see that the IWM is underperforming the SPY with our AC plugins here that are going to be very key this year. And in terms of momentum, we're under the 50-day moving average, and we're even under the zero line. That is in itself is not terribly healthy. Now, if we switch to Grandma XRT, now that too has been relatively sideways, although XRT has gone through to the upside and gone through to the downside. But here we are back smack dab in the middle, or closer to the lower end of the range, underperforming, and also momentum below the zero line. So also underneath all the moving averages. So XRT right now is actually in a distribution phase. So We did have this interesting peak bottom here. If we don't violate this 83.51 that we saw in December, that would be a relatively good sign. So let's call it that. If we can hold this 6-month low reversal pattern that we saw, then 83.50 becomes the jumping point. But we still have a lot of resistance. And if you look at the weekly chart, it got right to the top of it right before the year ended, and now you can see that it's coming down from there. So again, granny consumerism extremely important, and of course 70% of the GDP. And now that Christmas is over and the shopping season is relatively over, I did hear today that there's been a record number of returns of things that people got for either for other people or for themselves so far as we've gotten into January. So this is another big key to watch. 83.50 we're going to call the rock bottom support. And if we can get through 94, new life, amazing. The market would definitely be extremely bullish at that point. Now, if we go to the other sector that's really interesting here, we have to look at transportation. Now, I call this the most promising sector of 2022 for two reasons. One is, if we are going to get any kind of improvement in the economy, then you're going to start to see goods moving faster. And two is, if we're ever going to see our way to the end of Omicron, then people will start traveling again. And we've already seen a little bit of a pop in some of the airline stocks. Not tremendous. They're still trading near their lows, but nonetheless, this is a key area. So now what is interesting is that this made a high up here. Actually, the high was, I was just seeing the high was at 282 something on another chart. I'm not seeing it on this chart, but nonetheless, let's figure that the high has been around 282. And now we got up close to that this week at 280.87 and have come off. So really, this is another key. If this can actually take out these highs of, let's call it the 282, then I think we can see a move up to 300, possibly to 320 if things get really robust. And that would not only give us a lot of opportunity within the stocks within the sector, railroads, planes, excuse me, cruise lines, that kind of thing. But even in the IYT itself, although it's a thinly traded ETF, you could see that you would have a relatively decent risk reward if we can actually get going. I would say it would have to hold around this 274, 275 if it gets through 282. And then we can see where it goes. So this is definitely something we're keeping our eye on. And the momentum has come off, but it's still holding above that 50-day moving average. Well below the 200, though. That's interesting. If you look back when we had this rally during 2021, or the COVID's over, everything's going to be great rally, you could see that at the same time, we were actually, the 50 was over the 200, which is what you really need to see for the most bullish condition. And that the momentum was over both the 50 and the 200 during that time, especially as we got through here until it finally peaked out. And this is why these add-ons are so great, because you can see that we never took out that Bollinger Band. We peaked high and we really weren't up back to that high until we got into November of 2021. So these really give you good information here. And I still think that we're in some trouble unless we start to see some of the momentum flip. And again, the price take out those key levels. Now, if we move on to KRE, now we're going to talk about what's looking as one of the strongest sectors. But again, 50 is under the 200. That shouldn't be, number one. And number two is momentum is still under the 200. So we're seeing this great rally to new all-time highs as I'm speaking to you on Thursday. Next week, we start a lot of the bank earnings. I would assume the bank earnings are going to be good. They have been for the last couple of quarters. But the last time we had earnings, you can see we had the earnings, this did well, and then of course sold off with the rest of the market as we got into the Grinch that stole Christmas until we had that last gas Christmas rally. But When we had the market dump on Fed Day, this went stronger because obviously the banks are looking forward to higher interest rates for obvious reasons. People will start to put cash back into the banks if they actually can yield some interest. So this is a really key sector here as well. And even though it's flying at this point, if you get any kind of move closer to 75, that could be another interesting play. So the next one, of course, is semiconductors. Now, semiconductors do not like higher interest rates, but yet when it sold off, it held a very key support here at the 50-day moving average. And every time we've come back to the 50-day moving average, except for a couple of exceptions, like here, when we cleared it, we've had a nice pop. And of course, if we look at the momentum here, you can see that the 50 is actually over the 200, although the momentum is underneath both the 50 and sitting right on the 200. And it's kind of in line with the SPY. So if we're going to see any kind of opportunity here, it's going to happen really kind of quickly here against this 300 level in the semiconductor space. This has been a leader throughout. Now you can see it's taking a little backseat to value. That, of course, is because of the interest rates. But again, a couple of hikes going to maybe 0.5%, possibly 0.75% by the end of the year. When you think about it, it's really still very low interest rates relatively. It's just not what people have seen over the course of the last 12 years. Then we finally have to look at IBB. Now, IBB has just been really bad, but it's held 140. 140 is actually a pretty key support area if you go back here in time to 2020 when it took off. But now, really, this is sort of a cyclical and non-cyclical, and that's what we're seeing here. You can see the momentum is pretty poor. This could be ripe for one of those mean reversion trades that I've talked about with you, where the momentum gets back over the Bollinger Band and the price gets back over the Bollinger Band. So that would be about 144 in price. That could be an interesting opportunity as well with IBB, because it could just simply be overdone. So 144 is a mean reversion potential trade. And there's a couple of stocks in here that I won't have time to show you today that I actually really like. So now let's go to the SPY, which also, like the semiconductors, hit the 50-day moving average on Thursday after the sell-off, but obviously can't compare itself to itself. But you can see the momentum here is not great. Even on this rally, we still had the 50 below the 200, so you can see why that's so important. This should really help with some of that fear of missing out. However, at this point now, we do want to at least see the momentum go back to the 50, and we want to see this hold the 50. So on Friday, you'll be waking up to the jobs report. That also could be key what could happen, because if the jobs report is poor, the market is going to take that as a sign that the Fed may have to be a little bit less aggressive than they're planning. And if the jobs report is really strong, then I think you're going to see more confidence that the Fed can act with what they're saying and end everything by March with some rate raises, in which case you could actually see the SPY break down under this 50-day moving average. So we're really here trying to just set up for the whole year to figure out what the heck is going on next. And then, of course, we have to look at Qs for the same reason. They've broken down under the 50, but you want to talk about a range-bound market. Here we are. We got resistance up here at 405, and we've got the support down here at around 375. And so right now we've held that support. Again, I think the jobs report will be an influence here. The direction of interest rates will be an influence here. And if you compare this to the IWM, this whole surge into value versus growth, the IWM is just in the middle of its chop. This is definitely showing there's been a rotation out of a lot of these big growth stocks. And of course, with valuation being what it is, that's no great surprise. So one of the things that I'm going to be really interested in is to see where fair value for some of these huge stocks finally come into play. For example, Amazon and Apple and Nvidia, which I'm not going to show you today, but I'm looking for lower prices and then the possibility. Okay, so let's go to some of the outliers. Now, of course, we have a situation with Russia right now. And you can see that we had a gap up in oil. Now, it's over the Bollinger Band here. It's just now getting over the 50. The 50 is over the 200 here in price. And I don't know why this switched here to USO. So give me 1 second to go back to the leadership and change it back to SPY so we can get an accurate, it says SPY here. Okay, good. All right, but you can see that in terms of the SPY, oil is definitely outperforming. In terms of the momentum, same thing. We had the death cross here, and we've never really been able to get back over to a bullish cross, which is really what we would need. You had it here briefly, and that's a death cross. In fact, I can't even see the time when we had a bullish cross. It was way back here, back in 2020. And that was when we had that huge burst. But what's interesting about the price here is that, to me, this looks pretty strong. And if we start to see oil get back over, say, $85 a barrel, right now it's trading at about $82 a barrel, then not only will we see this go much higher, this is the US oil fund, but this would definitely be inflationary, even though we know it's not counted in the Fed metrics, but it should be. And this is exactly what happened in the 70s. So people think that inflation has peaked. I'm still not so sure. It'll be interesting to see, because the interest rates relative to inflation are still really going to be low, especially when you compare it to something like 1979, 1980, when rates started out at about 5-6% and then went up to 12% and then higher. We're starting out at 0, and at best, maybe we'll get to under 1%. So that brings me to gold, because gold was starting to rally. And then, of course, typical gold, you sell the strength, you buy the weakness, is sitting here back down under the moving averages. And of course, compared to the SPY, we look down here, it's slightly underperforming. If we look at the real motion momentum, it's back under the 0 line after it was trying. And by the way, the 50 is over the 200. So right now, momentum is not bad. It's not horrible, but this has just been a big old whomping choppy mess. Now, a lot of people, including myself, predict that gold will turn around, but it's not going to turn around yet, not until we start to see those oil prices, I think, go higher. So now if we take a look at the interest rates, this is really where you're seeing a lot of damage. But how bad is the damage? Yes, it's underperforming the SPY, and that's usually a risk on type of situation. Momentum is not so great, but it is holding the 50. And even though we're under all the moving averages, we haven't gotten to anywhere near the support levels that we saw back in October. So keep your eyes here, because this could give a clue basically on how long-term bonds are going to perceive what the Fed might do going forward based on some economic stats and also earnings season. But of course, junk bonds to me is far more interesting, because junk bonds actually were doing really, really well and then had this big sell-off. And if you take a look, I'm going to actually look at this with an underscore JNK, because that's the way I'm seeing it on my trade station. If you look at it this way, you can see now that this is really underneath all of the moving averages. It's in a bearish phase under the 50-day moving average. It's sitting here with the possibility of some kind of mean reversion, but without the junk bonds here, when we started the year out in 2020, it was the junk bonds that fell first, then the rest of the market had its swoon. In this case, I wouldn't necessarily say that we're going to have a big sell-off or a big bearish market. I'm saying range-bound market, but this could still drop down to 106.50, which will do some damage to the rest of the market before it finds the floor. So you got to keep your eyes on this too, because unless it takes out 109, really right now it's showing that the high yield junk is risk off. So it's very mixed signals here. And of course, a quick look at the 10-year yields. Okay, this is IEF, and you can see that that actually made a new low. So that's really where you're seeing is it in terms of the mortgage rates. So that's kind of interesting to watch to see what happens there. If we go to the dollar, this actually right now is still in this bullish phase. It tested the 50 and then popped right up. I actually think if we look at the momentum here, it's sitting right on the 50-day moving average. This is a situation where the dollar can go either way. If we can get through these recent highs, then the dollar is going to continue to be strong. But on the other hand, if we break down under this 50-day moving average, that also would change the narrative a bit, at least when it comes to commodities. And of course, looking at Bitcoin, which also took a nice little dive, you can see here that though we're holding close to around that 42, 43 level. So right now, it's going to be interesting to see whether or not Bitcoin can get back through 45. And if it can't, we'll see what happens at 40, which was the last peak low, 39.40 that we saw back in September. Overall, people think Bitcoin is done. I wouldn't write it off just quite so fast, but nonetheless, these dips have been buying opportunities. You just have to wait for some kind of sign that they're going to hold. And then as far as the outliers, the last one we're going to look at is VIX. So with all the fear that the Fed has instilled, you can see that we had a big rally, obviously, Wednesday after the announcement, but it's still relatively weak. Although what is interesting is the momentum is showing a divergence to the price. So we would have to see this price clear the 50-day moving average to show that the momentum is actually right. So that's another thing to keep your eye on this year is where does VIX go? Can it go back over that 50-day moving average? Okay, now let's just quickly take a few look at some of the ones that I really like for this year. Oops, I don't know what happened here. Oh, let me get rid of this. Sorry about that. So this is medical devices. So medical devices is something I'm very, very, very keen on as we go into this year. Yes, it's range bound, obviously, like everything else. And I'm not sure why now we have two leaderships here. So let me get rid of this so that because it's taking up some valuable space. We got leadership VIX. We're going to get rid of that. Okay. So right here, if we look at real motion, obviously momentum is not great. And also leadership not great. But what I think is that because of COVID, a lot of normal medical procedures have just been on hold. I mean, try to go to the doctor or to the hospital or for anything other than an emergency, and you get pushed out. That's going to go away. And when that goes away, I think this is a great opportunity. So I'm actually looking to get into this sooner rather than later, because I like the fact that you have a good tight risk to these recent lows here. And I'm playing it on the basis of the fact that we can get back over that 50 and get back up to the highs here and maybe even make a new all-time high. So keep your eye on this one as well. Next one I like here is actually a utility, but it's in the water space. This is American Water Works. This went right down to the 50-day moving average and held. So I'm keeping my eye on this too to see if it can continue to do so. You can see here that the momentum broke down, so I'd like to see the momentum come back. I'm not so worried about the leadership possibilities here, but that's another one that I'm keeping a very close eye on. And of course, I've been all over the media talking about Mountain Pass, that I think Mountain Pass could double this year. This is rare earth minerals. Obviously, if the market declines, so will this. But if we can get a weekly close over 50, I think that's extremely strong. Next one I'm looking at is more of a bottoming kind of play, and that's FXI. If you look at the monthly chart on FXI, it touched on a major Bollinger Band. It touched on a major wedge line. You can see that it's still well under the moving averages here on momentum, although the momentum is coming up. But yeah, we're getting a nice pop. I'm looking at 36.60. We get a weekly close over 36.60. I would take a shot with a risk to just under 35. Couple more left here. Beyond, which is having a big move today. You know I love this stock. I haven't touched it in a while. Look at this big reversal bar it's getting today. But if you look at the monthly chart, last month's area is about 65.80. So I'm going to give this another day to see if we can get a close above 65.80, figure 66. And if we can, then it's possible that all the bad news is out of this particular stock. I was hoping it would get to 50. I thought it would be really cheap there. But then at least we can see if this has got some muscle, considering it's made deals with Kentucky Fried Chicken, Pizza Hut, McDonald's. So people are definitely switching to a more plant-based diet, or at least the fast food chains are experimenting with it. And then two more to go. Teva is a biotech that I'm watching very carefully. It's an Israeli company. Look at the momentum here. It's already showing a positive divergence in momentum. I would like to see this have two closes over the 50-day moving average. Really, if you wanted to look for a good confirmation, it would be over 9. And look at how it's outperforming the SPY here. So this is actually a good pick in that IBB space, as I was mentioning, especially if it gets that mean reversion over 144. And last but not least is Gogo. So this is in the IYT space, even though it's more having to do with actual internet within airplanes. Obviously, more plane demand, this will go up too. But right now, this actually never really broke down under the 200 and the momentum's not great. But I would like to see this one as well. Maybe clear on a weekly basis over 1390.14. Looking at this chart here, it would say 2 closes over the 50-day moving average, and this could be an interesting play too.
Okay, so that's a wrap. I hope this was enjoyable and informative to you. Next week, we start earnings season, so that will bring us a whole new thing to look at. And also, we get into the January calendar range. So in the meanwhile, you all have a great weekend. I'll see you all again next week. Thanks so much for watching, and bye for now.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.